presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, Parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you grabbing on a problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everyone. Basil Chapman sitting in for Tom O'Brien, and this is the Tom O'Brien Show. And Tommy just couldn't make it, and I'm subbing for him. And of course, I will also be interviewing Tim Moore a little later on in the show, so it'll be quite exciting to hear that, what he's got to say. What we're looking at here, talk about exciting. So the Dow is having a very strong move. It's up 537 points at 43,117. It has just broken the 43,115 high that was made back around about the 9th of June. It didn't take much time. Well, it was in a sideways pattern. So let me just go through this very calmly. It was in a sideways pattern that suggested to my service here at TFNN is I do the show at 10 o'clock, the Tiger Technicians Hour, every Monday through Friday, work days. And what we're looking at is within that show, I've been talking about certain aspects of the market that were on my watch list and that were really important. And one of them is the 9-period moving average. When it crosses over the 14-period exponential moving average, it can keep one in a position for much longer than you would anticipate. And when it finally goes from green, which is positive because it's gone over the 14-period moving average, from pink it goes to green, when there are certain declines, if within that decline the 9-period moving average remains green, then there's a really good chance that there's going to be like a spring-loaded move to the upside. Doesn't guarantee that it's going to go to the previous peak, but it says it's a very strong move. And therefore, when we went short the Dow, which is the day after this recent top, everything was looking like there should be a sideways consolidation, and that if the left side low was taken out, and that was right here, let me just get to that, right here, and that's basically at the 42,081 area. If it was just taken out decisively, there's a real good chance it could go down to the 200-period exponential moving average in the 41,700s. But once over the weekend, once the bombing started and basically ended, once you saw crude oil start to really turn down, and look at this, crude oil has gone from the 78s down to where it is right now in the 64s. I mean, that is a huge decline. But it's more than a decline. It's telling us that crude oil at this particular moment is just not an issue in terms of inflation, in terms of the Straits of Hormuz. The whole area of fear that comes across when crude oil starts to really move up is not there, number one. The icon of gold that I always talk about, that I see gold as an icon of fear for the Middle East. It is the traditional way of looking at any kind of warfare, and that is for people to buy gold, for countries to buy gold. Look at this. Gold is down $64. How much is it now? $64. And it's now, the 9-period moving average is still green. It hasn't turned pink yet. But when it does, there's a good chance that gold the upside will be extremely limited in this particular phase right now. And they could start to open up some more downside activity. That is really important to the market. And why does it help the market? Because just takes pressure off the market by saying that's something you don't have to worry about right now. Here's the other thing. Bonds. Look at this. The bonds were down earlier this morning when I did my show at 8 o'clock because I couldn't do it at 10. The bonds were down, yields were up. But we were looking at it and saying, well, it is holding the 9-period moving average. Let's see where it closes. But as long as yields are in this range, it's not an issue. If yields were to come down, because I had a question on my show a couple of days ago about the housing market, if the Fed's starting to talk about lowering rates, I said, well, let's go one step at a time. But let's look at Toll Brothers. Well, we did that. Toll Brothers, beautiful move today. It's up $1.67 at 114. Yesterday it was at 112, I believe, when we were looking at it. I said, this is one of the better ones in the home builders. It's still a very ugly monthly chart. The weekly chart is really only improving, but that is very nice action. It says a little bit higher, and you can start to see a test at 116.50 of the 200-period exponential moving average. Toll Brothers hasn't seen that level since it broke down way back, and that was in February. February the 7th was the last time it hit that 200-period moving average. So this is very important, and it's important for a number of other reasons. And the other reasons are, I was articulating this both yesterday, actually the end of last week, and in my show yesterday, and again today, is that you're getting this rotation, and that's really important in this market. So let me just run these real quickly. The Dow right now is up, let's see, it's up 525 at 43,108. The S&P right here, let's get to that. The S&P right now is up 72 at 6,097. The all-time high is right here at 6147.43. That was earlier this year, so it's attempting to get there. It's now in a leg C. In the weekly chart, the 9 is very strong. The MACD is strong. The stochastic's fabulous at 94%. On balance, volume is a little bit of a worry, but the speed with which we've turned around from going into that rectangle sideways pattern has been impressive. The 9-period moving average never even got close to turning pink, so that's still very positive for the daily chart. The QQQ is another area that's really important, and it gapped up today to a new, not just a recovery high, 540.81. I just want to make sure that I've got the right high for the NDX 100. That's the QQQ. Yes, 540.81. And the high so far today is 540.70. Did it? Yep, 540.70. It's an eye blink away from an all-time high. That is really good. IWM. Here we are. We're looking at the IWM actually participating very well. It's up 3.01 at 214.78. That is up 1.42%. That's very nice. And for the first time, the 9-period moving average since April, this is the first time the 9-period moving average for the second week, well, the week is not finished, but at least for the second week, the 9 is over the 14. The MACD is good. Stochastic's finally gotten to the 80 level, 80% level, and that's a big positive. Just once again, now I need to look at the SMHs because that's very important. SMHs are very strong. Now, 269.66 was the previous high, not the all-time high, and today's high is so far 271.33, almost at the 283.97 all-time high. Hey, very exciting. I'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
So this is going to be quite important because within the context of this sudden move to the upside, starting from the early morning slide, and then that huge gain towards the end of the day, and today we're getting a follow through. This tells me that we've got tremendous support. If there's anything, any exigency, anything that says to the market, oh my God, watch this, because there are so many people that I believe that are either out the market or are in quite a lot of cash, and they don't have all the positions that they want. I feel the same way for my subscribers. We, thank God, we've kept our long positions, core longs from the way back. We've got the Microsofts, we've got the Robinhoods, we've got them position, not full positions, got some positions left, and I did not want to get out of those at all. Why? Because of this very reason, that I didn't have any signal that said major sell signal to come, even though we had shorts. We were short the Dow, we were short the S&P. Fortunately, we made money on the short Dow, but the S&P we made 2 cents, and then we lost 2 cents, so that wasn't a big deal, and a 3 times long position. But mostly we had to keep those core positions because within the context of what happened, it just relieves so much pressure from the market. And if you're starting to get the yields coming down, if there is, that's the one area that I think is going to be fraught with just momentary moments of questioning, because the economic reports that are still coming out, they're going to be quite mixed. So it depends on how the market takes it. But right now, look, this market's doing very, very nicely. A couple of things that I want to look at. So we will be interviewing Tim Ord in the next segment. But what I wanted to show you is this. If you are looking at areas, and I've been going through this for the last couple of days, especially yesterday, there are areas where the market really beat up some areas, like here's a good example. We don't own this. I wanted to get into it. We haven't got into it. I think there will be a moment to get into it. This is Wayfair Inc. So this is furniture, lighting, all sorts of things, home goods. And the weekly chart looks like it's got a V-shaped pattern, and it's just come back from death. The daily chart is looking fantastic. You look at the monthly chart and you say, oh my goodness, this is a stock that was once at 369 round number high back in January, is when it came out as an IPO, January of 2021, and then it cascades down to the single digits. Here it is at going from 20, the last low was 20.41, and it's at it's trading right now at 51. Well, this is fabulous action. And it's done what I call the left side, right side price time match. This is a technique that I use. I have webinars on these particular techniques. Look at this. This is the cup formation. And if you can find the plumb line, the midpoint that says the number of bars from the left side high down to the low could equal the number of bars going back to that level on the right. But if it looks like you've missed the exact ictus, the low itself, then you have to find another particular candle. Well, I did that when I did the analysis about 2 weeks ago. And I said, by this particular date right here, if I can read it, it's a little faint for me, that would be June, round about end of May, beginning of June, it should reach this high that was made at the 51 level. Well, lo and behold, at 50 point something, and here it is at that level. But it could surpass it. And it says, most importantly, with the 9-period moving average so much further above the 14-period moving average, and the MACD group, the stochastics at 85, 89%, that's really strong. It says that any pullback should be within this rectangle. So anywhere between 47 and 45, maybe even the 200-period moving average, 42 on a worst-case basis. That's kind of what we're looking at. I'm just using this as an example of stocks that got absolutely hammered. Here's another one. So this is not a stock. This is ARKK, ARKK. This is Kathy Wood. It's her. Oh, I used to have this notated, and I haven't got it now. But I used to have it with the left side, right side price time match, which I wanted as 68, and it did that just recently. It got to that level. It's trading right now at 70.17. This is a fund, right? An ETF, Kathy Wood, and it goes from 125.86 back in November of 2021 down to 29 in December of 2022. So now it's taken all this time and it's got back to 70. But what I am pointing out to you is that there is room in this market, in this particular environment, to see a rotation that finally leadership could come into areas that were very, very weak. And for Wayfair, that's furniture, etc. For ARK, it has a number of stocks. What was that one we were looking at the other day? Well, it has Tesla, which has been helping it quite a lot. Tesla right now is down, but look at that nice move up off the 200-period moving average. Tesla is one of the few stocks down right now about 6 at 342, but it was helping this particular ETF. So as I'm looking at this, I'm saying if you can rotate through different areas, it means that at any point, if there is weakness in the market, there's a real good chance that other areas will make up for it so that we get a rotational correction. That's what all this what I'm talking about right now, what it's all about is to say, when you get the 90% market sell-off and when you get a rotational sell-off so that other areas can pick up the slack when some of the leaders start to fail. And I think that this is the story that says we're in that particular mode right now. For instance, GE has had a huge move up going from, I should mention that we are still long GE from the 198s. It hit 257 and then it pulls back sharply. Today it's underperforming a little bit. It's only up 65 cents. No, it's 87 cents right now, 248. So you can see that there's a chance that you've got some kind of rotation in some of the leadership. And I just wanted to point out that there's room for other areas to pick up the slack. And as I say, I'm really watching the housing. So for subscribers, there's a real nice choice now. And the whole thing about this particular move is that we're starting to see areas that are on the single digits and the low teens that are starting to move as well. That really gives you an opportunity to go for areas that are priced. You could look at the price and say, I don't want to buy anything for $200 and something. I'd rather be putting that money to work in something that's much, much less, maybe $8 or $12, and then I can spread out some money so that I can have a portfolio that has greater opportunity in different areas. So that's a very important thing. So I'm missing one thing, and that's high-grade copper. High-grade copper today had a pop earlier on. It's only up a little bit now, so at 4.83 or 4.88. It's stalling, but it actually is walking the 9-period moving average, so that's a good sign. So I wanted to do some things. I didn't finish up with the gold, so gold we're going to be going to tomorrow in a moment, so that's important. So gold now is still down 63. Silver was holding way better, and it's down. Whoops, why doesn't it come up? Let me just give it to you. So silver's down 36 cents. That's not too bad after a fabulous move. And I'm just watching this particular area, and you'll see it in the GDX, which is this is the gold miners, holding quite well when you consider what happened overseas. I would say that there's still some money coming into the gold and silver area, but I think that there's certainly a lot coming off. I'll be back in a moment with Tim Ward. This is Basil Chapman sitting in for Tommy O'Brien. My service is the Opening Call Daily Newsletter, and at 10 o'clock every day, market day, I do the Tiger Technicians Hour.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call Newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Good afternoon, everyone. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and it's my pleasure to be able to introduce to you Tim Ord of the Ord Oracle. Tim, how are you?
Good. So, kind of unusual market today. It's anyhow, we got a lot of divergence. Actually, if we can just jump into it, I'll show you what I'm looking at.
Sure.
The first chart is the daily SPY, and looks like we're breaking out here. That's where we are right now. Or I did this a couple hours ago, and I'm looking at the volume right now, and we're not too much higher than we're probably up about right here right now, and we're not going to reach. Once you break above previous highs on the SPY, you should have volume at least equal, if not higher, than the previous highs. That's not going to happen today. We're going to be, I don't know, probably estimate, we got a half hour to go here, and we're probably going to be about 20% lighter than the previous days. And to have a valid breakout to the upside above some previous highs, which the market's basically been trading sideways here for basically a week, almost a couple of weeks here. I think it's 10 trading days going sideways. And finally, we're breaking above those highs. So volume-wise, you should at least have, 90 million. Somewhere up in here, at least over 80 million, and we're not going to do that today. Like volume's coming in around 50 million right now, so this is probably a false breakout. And you go to the bottom window, and this is a VIX. In other words, when the SP hits a higher high, which it did, than the previous highs, the VIX should make a lower low, and that's not also happening here. We're actually making a higher low. So I'm not chasing this rally. We do have a little bit of panic, or actually decent panic in the fixed and trend, as I've always been saying over the last couple of years. You got to have panics at bottoms. Back on, I think this was the 16th or 17th of June, we had a trend close of 1.35, and the 17th we had a tick close of 234. So that would imply the market was basing. And we finally did break out a couple of days later, or actually 3 days later. Now we're breaking out, but volume's not going with it, and the VIX is not hitting a new low here. So, what does that mean? Well, it's. I put it this way: I'm not chasing a rally. I'm still.
Can I just ask you a question, because I think this is the speed with which the market was digesting all those big gains, even into Friday of last week, with the news over the weekend, and the speed with which the criteria that we can consider Middle East conflagration, Middle East gold and oil being imperative to monitor always whenever there's something going on there, the speed with which that both of them have come down, do you think that you could see a price catch up in the volume that comes in, because it was just so quick? People haven't really had a chance to. Yesterday, from the low to the high was like 700 points. Today, we've got another one of those moves. So it's the surprise factor, and could there be a catch up in volume? What do you think? Is that a possibility?
No, I actually take indicators as they show it to me.
Okay.
And so, could you be right? Yes, but from long-term trading, I guess, I take the facts as they come at me. If they change, then I'll have to change with them.
Right.
But, can the volume pick up tomorrow and correct everything that you which is what you're talking about? Yeah, sure. Then I'll change my view. Until that happens, I'm kind of questioning this rally, especially this is, the summer doldrums. If this was like September or something, I'd be more inclined to chase after this rally, because that's usually you get these big moves and stuff, not during the summer, but a lot of times, the September, October type rallies. And so I'm thinking this is not the time to chase it. If the volume picks up tomorrow to say 100 million shares, I could eat crow. So we'll see if that happens or not. I don't think it will, but we'll see. But anyhow, that's what the short-term picture is to me. And again, the volume is not lacking on this current break above the previous highs. So let's take a look at the weekly, see what's going on. If you notice, we're banging against these highs right here, which is basically 610, give or take, up in that region. So where we at? Yeah, we're 607 right now in that vicinity. So we're banging against these highs. And if you notice, if you look at the volume from these highs, you go down here, this volume right here is actually lighter than the volume over here. So in my opinion, you're banging against those previous highs. This is a weekly time frame. You're banging against these highs currently on higher volume. So eventually we're going to break through those highs. Once you start hitting previous highs and higher volume, you can still have consolidations, but usually they're minor, and the market's going to break higher eventually. So at one point, I thought we might get back down to 70. I thought we were kind of building a top here, and we're going to fail and go back down to 70. We still may, but it's almost looking like now the previous highs of around 590 is going to hold. So I think we're going to bang against the highs, come back down, then and probably start up. That's kind of what the weekly suggests. So once you start again breaking previous highs on higher volume, which we we're almost eyeballing it here. Looks like about double what it was back at the previous highs of early 2025, January, February timeframe. So that's bullish. It's just the near-term picture is a little bit confusing. At one point I thought we were building a right shoulder, and I think the market is not going to build that right shoulder now. I think we may come back down, possibly 590, and probably go right back up again. It's what it's starting to look like. So we may start breaking out, maybe not this week, because I think today's rally is a smoke screen, I'll put it that way. But I think we'll probably come back down again. And here's the weekly. If you look at the bottom window here, which is not ideal. The SPs are banging against previous highs, and also the VIX still making higher lows, which is another divergence. But you got a positive volume divergence, so I don't think that's a minor top of any consequence. So it's just kind of back and forth. But I bet before the week's out, I think we'll see 590 again. That's what I'm thinking.
Good. So, and we'll be back, folks. We'll be talking about the S&P. We'll be talking about gold, correct? And,
yeah, a little bit about gold.
Yep, we'll be back in a moment. Basil Chapman's sitting in for Tommy O'Brien, and this is Tim Ord from the Ord Oracle. We'll be right back after these messages.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, we're back and we're on with Tim Ord. We're looking at the Dow. Dow is up over 500 points. The S&P is up over 70 points. And we're on with Tim. Tim, can you continue, please?
Yeah. Okay. I flipped to a monthly chart here. This is the monthly VIX down here. The middle chart. This window here is the SPY. Whoops. Get back that chart. Yeah, the monthly SPY. And the last high was this high back in February, which is right here. And if you notice that volume, this month, it's not even over yet. And I drew a line across here. If you kind of see it, this month's volume is already higher than the previous high of February's volume. So on a monthly chart, that's bullish. So we're attacking right here. We're attacking this high right here. We're not quite touched it yet. So we're touching, or we're in the process of testing that high, and already we have higher volume. So the monthly charts have flipped to bullish. You can still have pullbacks, but usually pullbacks are fairly mild. So how big a pullback, don't know. But so you got the monthlies bullish, and if you go back to the dailies, see you got something a lot of different. You got light volume breaking above some previous highs, and on the monthly you got higher volume breaking above the previous highs. So the bigger time frames roll a time frame. So in effect, if you had to be in the market, you should be long according to the monthly charts. Not saying tomorrow's going to be an up day, but eventually you're going to keep going up here because you got a sign of strength breaking above some previous highs. You're breaking the previous highs and higher volume. That needs to be happening. I also got an RR here. That stands for railroad. And if you notice this volume here and this volume here, actually this volume's higher, but the volume are pretty equal. If you notice these two candles here and here are pretty equal, and this is a little bit higher volume. So you got big volume going down, or actually, excuse me, this volume, or this candle here is about equal to this candle, and this volume here, which is basically this candle right here, is about equal to this volume here. And if you notice, those are parallel. You got parallel volume, pretty much equal, and you got parallel candles. They're about the same length and stuff. And so it looks like a railroad track. So you got volume matching volume, you got price matching price. And that's what happens at major reversals. And this is on a monthly chart. So back in May, it really flipped to bullish. You had big down volume, reverse, had a big up volume, and that suggests a bull market going forward. You can have consolidations or so, but in general, the market bottom is in, and an impulse wave to the upside more or less has started, even though you may see consolidations on the weekly and daily time frame. So I wanted to point that out. So now you're breaking previous highs and higher volume. That's also bullish. So the only thing really negative on the market on a short-term basis is the dailies. The dailies are, if this breaks a false breakout here, I think it will come back down to this area right in here. So I think that's probably what's going to happen. This volume today should be at least equal to the previous days we had, and that's up around at least 80 million, if not higher. And we're not going to reach that today. So that's that. So am I long right now? No. Will I be long if we get the pullback? Probably yes. If the market continues higher, if for some reason the market picks up volume tomorrow, will I be long? That's a good maybe. So I'll have to see. But today is not a breakout day that's supposed to happen. You're supposed to see a sign of strength through the previous highs, and today is not. That's not happening today. So we can flip to the gold market real quick.
Good.
In a nutshell, this is what's happened. I think the bottom, or I think the top, is in. If you notice these 2 days right here, you got a bearish candlestick pattern. Shooting star, I think they call them. And here you go back up and test that shooting star. So if you look at the volume on those days, you got volume here coming in a little less than 150 million shares. This is a weekly chart actually, and the next week you test that high almost to the penny, and volume comes in at least 20% lighter. Looks like about 100 million shares, maybe even 30% lighter. So, to my opinion, the top is in of some sort. So, if you can't take out the previous high on higher volume, it'll fall back, attempt to take out the previous low. Well, previous low on the weekly chart is this period right here, which is that'd be made be this. Looks like a second week in May, mid-May, which comes in around 45. So we're going to take a shot at that low. If you test that low on an equal volume or higher, you're going to go down. If you can't hold that low, you could go down to the next low, which is basically this low, and that's around 40, actually 39. So at minimum, I think you pull back to 45, and the door is open to pull back to around 40. Depends how this low is tested on the weekly time frame. So even though the market really had a decent run, really had a lot of energy to the upside, it's due for a rest. And so either 45 or 40 was coming up. When it'll happen, maybe July, August. It takes time. I got out in mid-April around the 50 range, and I've been out since, even though we're up to a test here. But actually, this high here tested this high on 80% lighter volume. It shows, so that's a weak. It's a fairly bearish sign. But when you test the previous high on 20% or even greater, that's a real strong sell signal. So the weaker the volume on the retest, the stronger the sell signal. So this high is pretty strong. So nothing real submission to the downside, but I think we'll see 45. This is on the majors. GDX,
right.
There's pretty AEM and I don't know, all of the Newmont Mining, all the big ones. And if you look at that pattern on GDX and you look at the major gold stocks, all those patterns look similar.
Right. So AEM, Agnica Eagle, had a high back on this is, I think it was April, and it retested the high the week of the 6th of June. And then it started giving it up. And for my technicals, the MACD started to pull back, stochastics pull back, but the 9 is still holding very strongly. So it's very interesting. The speed with which these start to come back is going to be very important. But I get your point exactly with the test of the double tops. How it reaches that right side test is going to be very important. Has been very important.
Yeah. So it's just on the bigger time frames, I'm really actually super bullish. And a lot of these small ones, if you look at the monthly Bollinger Bands and the volume coming in on these small ones, we're still in the early stages of a bull market. not saying we're going to have any fun over the next several weeks or so, because I think this pullback will be halfway persistent into August. But the bigger time frames look really bullish. So
just as we're about to end this, could you just tell folks how they could reach you?
Yeah, it's ord-oracle.com, and go to that website. You'll see, or put in Tim Ord, T-I-M. My last name's Ord, and you'll see some articles in there and a bunch of other stuff, and that's you can find me easily. So
thank you very much, Tom. Always great to hear you and what you have to say. It's really important. And Thursday we'll see you again.
It oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. And this is going to be very interesting because I had a question. I have a technique that I developed a long time ago. It's called Chapman Wave 352. What does that mean? It means that at 3:52 in the afternoon, just 8 minutes before the bell closes at 4 o'clock, if this has been a strong market and going into the 3:37 time frame, the strength rather than weakness, there's a chance that you could have a rally right into the close, and it goes right through the close. It's a very exciting 8 minutes. In fact, the E-mini, the futures can move 6 to 10 points in that moment. This is different because have a look. What we did is going to that 637, as I was talking to Tim, look what happened. We made a top. and that top set, and I circled it right here, that 200-period moving average will become a magnet. We went to that magnet line. The day is still young. Anything can happen. But unless at 352, and what are we right now? Let me 355. Yeah, I think we might rally, but we've lost that momentum. So that's not. So the question is, what about the 352? Is today it? No, I don't think so, but it's been a spectacular day. Let me do this just to sum it up, because we've got a brief moment here before we wrap it up for the day. The Dow has had a sideways move, even with this move today, basically for the last number of weeks. Since about the 19th of May, we've kind of gone sideways. This break to the upside, though, is really important, especially if the MACD, the moving average convergence divergence, actually crosses positive, and the stochastic, which is kind of weak. Tim was talking about volume. I'm looking at on-balance volume, which is actually strong. But if this stochastic over the next few days can get to 80%, that'll be good. So what I'm looking at is that this is a response to what happened with the crude oil and gold tanking. What's really important is that I think from my weekly chart that we can rally maybe even into Thursday, Friday, but I think next week we start another digestive phase, but maybe it's much milder, and we'll see what bonds do. So